Hello everyone, and thank you for your patience for the start of this webinar. We've changed the date and all sorts of things have been going wrong. Not least, neither David nor I got our webinar links. So I'm glad you all got your webinar links. So it's great to have you join us for this session. I know some of you were with us this morning. We're basically doing all the webinars on a Wednesday, and it's rather nice because it allows us to have a kind of continuity of narrative from the Forex, with the indices and with all the markets. Anyway, but before we start, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Brilliant. Let me just shut that off and let's see what is happening on the markets this afternoon. First of all, a quick look at the fundamental news. I'll just refresh that, and really it's it's a statement in Canada where they basically kept rates the same. Surprise, surprise. The only surprise would be, or shock would be, if they actually raised them. Perhaps they were going to or lower them, but they've kept them the same. And obviously the job openings, which have come in slightly better than expected, which must be very good news given the carnage that we have at the moment in the labour markets. Right, where shall we go? First, let's see, let's just bring that down. What we're going to be doing, those of you who come along regularly will know, and I know because this is a new series, we have some new attendees today. As I said, those of you who come along regularly, I know we've got some of our Forex program students here, some of the users of our indicators, but we will be looking at the charts and the markets through the prism of volume price analysis. It's a methodology which uses price action and volume to really determine whether what you're seeing on your chart is a genuine move or not. So we look at things like anomalies, but VPA is also, that's two elements of VPA. There are 5 elements altogether. The third element is support and resistance, and that is absolutely huge. I can't stress it enough. In the VPA methodology. Now we look at support and resistance. We have price-based support and resistance, we have volume-based support and resistance, and we also have a very, very special indicator that helps us determine whether those areas of support and resistance, how important are they? How significant are they? Are they going to be areas where we are likely to see a reversal, or are they areas where we're just going to get a pause before the price goes on it resumes the trend? And understanding trends, understanding where you are in a trend in the time frame that you're looking to trade, and understanding the trend, maybe how that compares with a slower time frame or a faster time frame, is really something that we have to get our head around, and it's something we cover in great detail in the Forex program. It's based on Wyckoff's principles of trend, primary trends, secondary trends, minor trends, and as I said, it's looking at price action in one time frame is it's relatively straightforward, but it's putting that in the context of multiple time frames. And if you have these support and resistance, they will help you determine whether, when the price has come to a pause, is it a potential reversal, or is it simply going into a congestion? And that also helps with joining a trend, because markets are a continuum. There's no start. Back in the day when we started, everything started with a physical open. So we all started at the same point, as it were. But with 24-hour markets, even in the indices, you've got to take account to what has been happening. And clearly, looking at the indices, I've seen the open at 230. They are going up. They've taken on the sentiment that has carrying through the sentiment from Asia, the London open. So session opening times, it's not just one now, it's 3. You've got the London, Europe, which counts as 1, you've got the US, and obviously you've then got Asia. They're all interconnected. Now, to go back to VPA, what we've done is, as well as the book, there is now a companion book with over 200 worked examples, because that's what traders wanted. They wanted to see examples of the anomalies of VPA on actual charts, and this is the book that accompanies that covers indices, stocks, and commodities. And there is a specific one for Forex. Apologies, it's just one of my alerts going off on my NinjaTrader. Right. I said there were 5 elements of VPA. We've looked at price action, we've looked at volume, support and resistance, but we're looking at candles, candle patterns, and obviously time. And we've looked at, and time is not just the chart that you're trading, but multiple time frames as well. What I want to do very quickly is have a look at what is going on in the indices for sentiment. If you're going to be day trading Forex, you will need to know what is the sentiment of the market. What is the risk appetite of the market? Is it happy to take on more risk or not happy? Because that actually will determine the flows into specific currencies and currency pairs. One pair, for example, is the Aussie yen and also the New Zealand yen, because Aussie and New Zealand, they are commodity currencies. Commodities are perceived as riskier assets. They move strongly when the sentiment is positive in the markets. There's a demand for commodities because the economy is moving forward, as it were, and they're sold off when the sentiment changes. Now, if you are an index trader, or even a stock trader, well, then you still want to look at sentiment. We can see here we've got the YM, this is the YM, the US 30 futures. That's up 376, phenomenal. The S&P futures, that's the ES, that's up 46, and I think the NASDAQ, which is where all the sell-off has been happening lately, that's only up 180. It was up over 200 this morning, but it's certainly not storming ahead as it has been because of this huge sell-off that we've seen in the markets over the last three sessions. That's Friday, Tuesday, and Monday and Tuesday. Although Monday, I do appreciate the US markets, the physical market was closed. And talking about sentiment, again, it doesn't matter what you trade, we look at the VIX. Now, this is investing.com. Investing.com is a fantastic site, has lots of resources for markets and charts that potentially your broker may not offer you. It's also free, which is great. And what you should be looking at for sentiment is you need to be looking at certainly the VIX. This is for the S&P. And the reason, as I explained this morning, the reason we look at the S&P and the VIX is because the S&P is like a global benchmark for sentiment. I know recently the NASDAQ has been storming ahead, and that's kind of taken over a little bit of that role. But certainly the VIX is what you look at for risk appetite. And very broadly, if the VIX is rising, then what you can expect is the equities and the futures will be falling. So it's an inverse relationship. I won't go into too much. There's all been sort of strange things happening in the options market. You may have read about SoftBank, and it's kind of been distorted recently. But generally, this relationship, it does hold. Now, if you're trading the NASDAQ, for example, just to let you know that on investing.com, it has its own volatility index. It works in exactly the same way. So if the VXN is falling, you would expect the NASDAQ to be rising. And the Dow Jones, the YM, also has its own volatility index, and exactly the same it's exactly the same approach. If it's falling, then you would expect the indices to be rising. Right, so that's the general sort of intro on what to be looking at. This morning we had pound dollar. We were looking at cable. We were looking at possibly looking at a potential reversal. It didn't actually happen. In fact, the cable carried on lower. But what I'm going to do is I'm just going to get my charts together, because I want to cover a cable just to recap on what we looked at this morning. There was a potential for a little scalp. once that was over, congestion followed, it went lower, and cable and the British pound is also at the mercy of what is going on in Brexit. I don't know if you've been following it. Certainly if you're trading pound, British pound, you should be. There's all this kerfuffle about the withdrawal agreement that was signed last year, whether the UK wants to make some kind of amendment to it. The comments in the media, from what I can see, are very partisan. In other words, outlets, spokespeople, analysts who are very pro, who really don't like the fact that Brexit is happening at all, have one view, whereas the rest of the population has another. So it's all a bit of it's all a bit up in the air at the moment. But the British pound seems to have recovered because it's not quite a bigger deal as a lot of people are making out. I also want to look at the New Zealand yen, because New Zealand yen is a really classic case of yesterday it fell 100 pips, and I think it's almost up 100 pips today. So it's one of these pairs that you should look at for sentiment. And I've actually got the YM up at the moment, and I think that's also moving higher. But let me just pass over to David, and he can look at his charts first, and then we'll come back and we'll go through those charts. 4 VPA lessons linked to support and resistance, looking at trends, looking at where in a trend you likely to get a reversal, what to look for in a reversal, or if a reversal isn't going to happen, an opportunity to actually join an existing trend. Apologies for that. David's not quite ready at the moment. He's had a few issues with his NinjaTrader platform. He's basically having to reboot it. So just a very quick recap: what's happening on the Forex side, and this is where we go to our specialist Forex indicators that we have developed to help us, as I said, monitor the flows into the individual currencies and currency pairs, which not only give us, highlight potential trading opportunities, but also tell us when it's that there is no trading opportunity, because sometimes as a trader it's just as important to stay out, and when something is just not tradable, if it's in a very narrow range and it's just simply not going anywhere, then this indicator will also help determine that. And basically it's when the lines that you see on your screen are going in the same direction. Each of these lines represents a currency, and we can see very clearly the Japanese yen, the magenta line, is falling very, very strongly. This is the pound, which has finally resurrected itself from its oversold position, and it's been oversold. It's been heavily there's been heavy selling of the British pound in the last 3 to 4 sessions. So potentially we could go and have a look at something like the pound yen. But the currency pair I mentioned was the New Zealand. We can see the Aussie moving strongly higher. We can see the New Zealand moving higher. And in fact, if we pull up the yen pairs, so this is a breakdown of the individual currencies, so we can see where the flows are in whatever time frame. I like to use the hourly chart for actually taking the trades on the faster time frames. I would have multiples of this indicator, but the hourly is quite a nice chart to have a look at because of these session crossovers. It gives you enough information to tell you what's been happening, where you are at the moment, and potentially how far further possibly the currency is likely to move. Then what we have is we take that data and we've collated it onto a matrix, and it tells us which are the strongest pairs, where has been the most, if you like, either buying or selling. The numbers on the side of the that are generated on this indicator are also very important, because they give you quite a lot of information. First of all, if it's a very high number, this is plus 86, we know that the move in the New Zealand yen is pretty strong. There is going to be a modification to this indicator, or rather an upgrade, in that we're going to have a sort of signal service on here, which will tell you, is 86, 87 you see now, is that a high number? Is it a median number? Or is it just sort of average for this time frame? And that's because we've done that for TradeStation, and we're now going to roll it out on the indicator for the other platforms. Now, I know this is a high number. Why? Because if I look at the weakest, you know, where at the other end of the spectrum, we've obviously had a sell in the pounds, the solid dollar Swiss. But look at the number; it's only minus 38. It's only minus 38. That tells me that all the action has been on the buying side of these commodity dollars, which actually reflects, as we can see here. Let's move to the Nasdaq. That's up 216 now. Where are we up on the Dow? It's up 400, over 400. They are storming ahead, and that is reflected in these pairs and also in these numbers. This is the currency array, which is where you have the strength of trend is measured. So we can see here the two top are New Zealand yen and Aussie yen. So a lot of information, not just for potential trading opportunities, where is the money flowing into which currency, what is the sentiment. There is so much information. It's a very nuanced information which you can then take and apply directly to the Forex market, or you can take it and it will give you a sort of broader context as to what is happening in the indices. As an index trader, I would certainly hope you would certainly look at what the yen is doing, what the other safe haven currencies are doing as well. But I will go back to NinjaTrader when you come back and join me, but I just want to move over to David. I think he's got everything up and running. If you've got any questions, please just drop them into the chat box, either trading questions or anything that we've said or that you see on the screen. We'll be more than happy to answer them for you.